Very good morning, guys. Tuesday, 17th of January. Let's get on with the briefing for this morning, and what you can see as reflected on my charts here. A general risk-averse start to the trading session, and obviously looking at the major news wires this morning, you cannot help but be overloaded with Brexit headlines. We're going to talk about that shortly, but just looking at things as we can see here at the middle, the DAX and S&P already have traded a little heavy this morning. The S&P going through Friday's low that you can see there that we printed on the morning. Obviously yesterday, very tight range that was really confined between, you can see here, that 64.5 to 69 level. That was because of the US holiday. They are back today and fully into the market. But the DAX also in suit, just looking a little heavy through the usual pickup in volume through the cash open. Elsewhere then, the dollar is weaker, with equities down. That means that generally supportive of gold, and you can see there on top right, we're already up around $17. I'd say that's a pretty decent move for this time of the morning. Having been elevated overnight in the Asian session, we managed to get above both that high print from Thursday and also from yesterday, and trading above the respective R2 already. Consequently, with the softer dollar reflected in the US yields being lower, so the T-note you can see here as well, already up 14 ticks. And anyone who trades T-notes will know that a 14-tick move coming in at the European Open, that's a fairly punchy move on the upside by any stretch of the imagination. So we're already positioned quite negatively. Now the dollar is down, the dollar index is down 0.6%. One thing to draw your attention to that not many people have really been talking about, because it's been so overwhelmingly Brexit focused, is Donald Trump. Obviously, just aside from the kind of short-term distraction, we're going to get 11:45, and we'll look at this in a bit more detail with the Brexit side and Theresa May's speech upcoming. But Donald Trump has been the main kind of driver of financial markets of late, and he did make some comments in the Wall Street Journal late yesterday. He was talking about, essentially, the president-elect, that the greenback, which is the kind of nickname for the dollar, was too strong against the Chinese currency. Our companies cannot compete with them now because our currency is too strong and it's killing us. So he's talking down the currency, and definitely that's taken a bit of an impact in the currency markets, both overnight and this morning as Europe has come in. You know, he is, at this point, a lot of the performance of the dollar has been hinging on his fiscal policy. Certainly the big ramp up in the dollar that you saw ever since really the election, on this Trumpflation on the fiscal stimulus side. And now you're sort of seeing this is a slight concession, and that actually can he be so aggressive on that front? Because ultimately it's making the US less competitive. So very interesting comment there from Trump. Certainly the dollar's been on the back foot. So when we transition here back to the charts, you can see top left-hand corner, not just cable, but euro dollar is also up. So both currency pairs on the front foot, supported by the weaker dollar. Now this does make things a little bit more interesting, obviously from a cable perspective, which is going to draw the main focus today. Now looking at where we reside at the moment, this was obviously, if I just mark this up, that was the big gap lower that we had, the reopening of electronic trade in the futures on Sunday night on the back of that kind of hard Brexit, leave single market headline that was leaked by the press at the weekend. Then we kind of moved down in the futures. We touched the 120 psychological handle before seeing a bit of a rally. A few people looking at the fact that Trump was saying that any negotiations with Britain would be first in the queue. Also, the Treasury said to be talking to banks within the financial sector in the UK to calm them about any pending volatility on Theresa May's speech today. And that prompted a bit of a recovery here off these lows, probably in addition to a bit of profit taking with the information at hand at that point. And then we've actually, during the Asian session, given this dollar move and weakness on the back of the Trump comments, we've managed to punch through that 121 handle. And you can see that technically the 121, looking at the range from yesterday, that really defined the top side of the price action both in the morning and in the US afternoon. So a break of that probably just exacerbated the push higher in generally thinner liquidity in an overnight Asian session, and we immediately punched up to the all the way up to 121.40 is where we trade at the moment. So haven't quite fully closed the gap, which would be more akin to just shy of the 122 handle, but certainly we're back up to the lower bound of the price action that was seen on Friday in terms of cable. Now, one thing to keep in mind, ahead of Theresa May, we do have UK inflation. So let me just bring that up and we can talk about that first, because we want to go chronological in terms of how these events are going to come out for you guys to trade. So let me just move my screen over. So looking at the UK inflation rate, rose 1.2% in the year to November, compared with 0.9% growth in October. That was above market expectations. Let me see if I can just get the year-on-year readings here. Yeah, so that was what we were looking at, 1.2%. The median consensus today on the year-on-year is for an uptick to 1.4%. Obviously, a lot of people have been focusing on inflation. It's kind of taken, I'd say, a back seat to Brexit first and foremost. But if you remember, a few months ago, everyone was concerned about the speed or what rapid reflation that we could see on the back of a weaker sterling. And sterling has continued to weaken, which is only further fueling those expectations then that prices in the UK are ultimately going to go higher. We've already seen that with high street prices in regards to food prices, also white goods, tech products such as Apple, we saw a few months ago putting prices up 10 to 15%, and a reflection of this. So certainly this will be a number to keep an eye on, and even ahead of Theresa May could act as a potential catalyst for some, I would say, short-term volatility. And by that I mean probably most people will be not wanting to commit too much of their allocation of, I'd say, their size to trading the CPI, given that the bigger event is ultimately going to be Theresa May, which will follow roughly 2 hours later. So when you're trading this CPI, let's say hypothetically we get a 2% year-on-year reading, which would be a very sharp increase and way above expectations. I would expect the pound to strengthen, but ultimately I'd say you'd need to be pretty proactive in terms of your time frames of how long you would want to hold such a trade, because people are probably unlikely to commit for too long a period, as I say, just given the fact that Theresa May is upcoming at 11:45. So keep that in mind. But we are, I would say, the market from an inflation perspective is probably more placed for higher side surprises. So anything other than that, let's say we get a pull back to 1% or below, I would say that would probably have the bigger short-term reaction, given that markets are generally erring on the side of prices increasing for the foreseeable future. You did have Mark Carney speak last night, and quite honestly it was a bit of a dull affair, but a few things that he did say. Recently there have been signs of continued solid consumer momentum domestically and a stronger growth outlook globally, and at the same time the British consumer appears to be looking through Brexit related uncertainties. Well, he's certainly going to be tested on that last phrase when Theresa May unveils a little bit more detail on the Brexit plan in a short while, but certainly striking a little bit of a hawkish tone, very optimistic generally speaking of the domestic and global state of the economies. So that might also explain a little bit of the lift in cable, but ultimately I think it's more of a dollar weakness play than anything. He continued to reiterate that limits to the extent in which above inflation can be tolerated. So again, kind of already playing the game of looking to temper market expectation if inflation does start to ramp up. So that's your kind of inflation side of things, but let's get down to the business end of what we're looking at today, and that certainly is the situation over the Brexit details that are going to be coming up shortly. Now, much of the main headlines are talking about Theresa May ready to announce Britain will leave the EU single market. Not sure if any of you have been monitoring the press last night. But essentially, there was another kind of in detailed leak, if you like, about what she's going to say today. And quite honestly, actually, this speech is pretty much being completely outlined in the press over the weekend and last night about basically May's speech to outline 12 key priorities for negotiations. Includes gaining control of Britain's borders, preserving the Union, signing major free trade deals, taking the UK out of the jurisdiction of the European courts, and maintaining workers' rights. The significant part was that this will not involve partial membership of the EU, associate membership of the EU, or anything that leaves us half in, half out. She's trying to be, I guess, as clear as possible there about Brexit means Brexit. The leaks also suggest that May will also say that we do not seek to adopt a model already enjoyed by other countries, and we do not seek to hold on to bits of membership as we leave. So pretty aggressive in that strong, hard Brexit tone. But actually, talking to Vas this morning and just having thought about it just generally this morning and overnight, the first thing I did when I do my regular routine is I go through much of the press, so national newspapers. I'll also go through Bloomberg, Reuters websites and so on, to just get a general vibe and sentiment of what the context is on the day, identifying key stories, but also to gauge a bit of sentiment on what people are saying about certain topics. Now, the first thing I noticed was that when I looked at the Bloomberg homepage, it has basically a cluster of stories, and I would say of the 10 that you could see just visible on your screen as headlines, about 8 of them were all talking Brexit, and they were all negative about Brexit. The impact it's going to have, risks surrounding Brexit, the Treasury talking to banks in order to negate volatility and any run that we get on the currency. But whenever I kind of have or see this type of situation, it just makes me feel like maybe the market has got a little bit carried away here with what ultimately Theresa May's actually provided a lot of clarity. She said from a number of weeks now that Brexit means Brexit. She's stuck to that kind of more hardline angle ever since that Tory conference, that Conservative conference that we had, I think it was in Q3 of last year. And the leak that we had at the weekend about wanting to lead the single market, we obviously saw that have some ramification in that quite sharp gap lower in the futures price in cable. But now these added additional points about her 12-point plan, what else is there for her to say? I mean, the market seems to have got over it already. Yes, it's been helped by the weaker dollar, but my fear here is that there's so many people today looking to short the pound. Actually, I think what might happen is a real possibility is the pound might start edging up because she just delivers what we already know and that's already priced in. People start getting squeezed in their shorts and start bailing, and then the price just starts actually moving higher. That's definitely a scenario I would not rule out. On the flip side of that, I think what we don't know at this point as well is whether or not there's a Q&A. So timing-wise, she's set to deliver this statement at 11:45. So you must be on point and at your screens ready to go, I'd say from 11:30. In terms of the reverse of the scenario I was just talking about, obviously the downside areas that we'd be looking at near term, obviously that 121 was the level which was breached overnight, late Asian session, which caused quite a blip higher. But then ultimately to the downside, it was 120 in the futures, which we tested and bounced at the open yesterday when we came in. In the spot, we did move briefly below that figure, but that's the big one to look for. And if we can get through there, then that does certainly open up a bit of room to the downside. So that's the kind of reverse. But what I'm saying here is that actually, I just think the market is so overtly negative that it would take a lot, I feel, for the pound to really get knocked severely lower today. I think maybe Theresa May's been very clever about this by purposefully leaking this information in a central bank communication style to the press. in order to get the market comfortable in what she's going to deliver is a very hard Brexit speech. So that's my kind of take on it. It'll be interesting to see as well the inflation element. If that surprises, that also just throws another difficult angle to trade the event into the mix. Let's say hypothetically if it's extremely high figure, because that will also push the pound higher, which then kind of changes the scenarios a little bit, where actually there's probably some room to move back down again should we go elevated on high inflation, to then reprice maybe back down to that 121 handle. But ultimately a break on 120 is really the key one to see an extended move to the downside, I'd say. We talked about this yesterday, but just to have a recap, obviously any time Theresa May speaks is a big trading opportunity, and it almost now becomes self-fulfilling in a way, in that because everyone's talking about this increased and heightened volatility, everyone else wants to trade it now from an intraday perspective, and so it just exacerbates the move, so to speak. You can see here the various highlighted ones. There are other things that have happened, i.e. in August when they launched that Bank of England, the full stimulus package and the cut in rates. It was a big down day for the currency. You had that beginning of October Conservative Party conference speech. That was the first kind of outlay of the hardline angle. The flash crash. Then you had the Federal Reserve hiking rates and that increased trajectory and the dot plot projections, which forced the dollar higher, so consequently the pound lower. You then had this latest one here. You can see it was one of the bigger moves that we've had from that weekend press article. But from implied overnight volatility in cable, which is what we were talking about yesterday, this is the hedge against volatility, that spiked to near 30% overnight, and it was trading at around 10% on Friday. So priced in for hedging against volatility occurring in the currency is actually its highest level now since August, when they delivered that over delivery of restarting QE, cutting rates, pledging to do more, and so on and so forth. So certainly the market is erring on the side of today being a big event. One thing though that continues to buck the trend and just keep a fairly tight correlation with weakness in the sterling currency overall. Now this is slightly delayed, but it puts it in context, is the FTSE. You can see here ever since really December, and then certainly since we've come back in from the new year, we just continuing to punch up at these levels. So 7,300 above there is where the FTSE trades at the moment. So that's another asset to potentially keep an eye on when Theresa May is talking later. So that's kind of the main event. That's certainly where I'd say you want to be gearing most of your trading attention toward today. So as I always say, when you're kind of preparing for your strategies, you want to be thinking about your kind of allocation of where you want to place your firepower, if you like, over what periods of the day. And as we've just identified, really, if I flick over to the calendar for today, it's that 9:30 area of inflation readings that we get from the UK, followed by 11:45 when we have Theresa May speaking. And that's because when you look forward to the US afternoon, or later in the European morning, yes, you have the German ZEW economic sentiment, but again, a lot of people will be sitting on their hands waiting for May to speak. Then in the afternoon, New York Empire State Manufacturing, consensus estimate is for an unchanged number from the prior month, and we're not really at a point where US policy is going to be significantly influenced by this kind of data. More so, it's more about the Trump play at the moment, especially heading into his inauguration, which we'll get at the end of this week on Friday. A couple of speakers, though, definitely you should be aware of. ECB's Novotny later this morning. But from a Fed perspective, Fed's Dudley, who is a voter, speaking on consumer behaviour. That's ahead of the open on Wall Street. Fed's Brainard giving a speech, voter and Dove. It's at 3 o'clock. Fed's Williams speaking later on into the evening. And that World Economic Forum in Davos gets underway as well. So just be mindful that you might have some central bankers, politicians, oil ministers speaking on an ad hoc basis. To follow Davos, I think there's a live link on the website on the Davos website. However, Bloomberg, CNBC, they'll all be covering those on the major TV stations as well, networks. Something to have on in the background for the what if someone says something of significance. So that's your kind of day as it's planned at the moment. So good luck with trading sterling currency. And then I would say you want to play the market accordingly. You'll be looking for a pickup in volume and momentum. So we had an incredibly slow day yesterday. I would not be expecting that to happen today. A return to normality. Our friends over the Atlantic come back into play. And no doubt they will be in early doors as well to also trade this main event from the UK Prime Minister. Okay guys, going to leave it at that and let you get on with it. So enjoy your morning and your trading day, and I'll catch you in the chat room. Thank you.